Hey guys, welcome to another webinar. And today's webinar, we're going to be looking at some asset classes such as indices, and we're going to be looking at some FX. So for people that have never been here before, what we do here is we look at the financial market every Sunday, and we try to see which assets are in alignment with our current investment strategy. So keep in mind, this is for educational purposes only. This is our own personal outlook towards the financial market. This isn't investment advice for you. So that has to be stated. And also check the disclaimer below this video to understand more. That being said, let's move straight into it. So for people that haven't been here before, we have three strategies. We have something called the COT report. We have something called the seasonality. And then we have something called probabilities, right? So all these three do different things. Now, COT reports in a raw format look something like this. So we get this information from CFTC, and it shows the position in which certain traders are in at the moment. So, for example, if you trade the S&P 500 mini, or you trade in, let me find something that Dow Jones DJI, for example, you can use that. Or if you're trading currencies, for example, there's so many currencies here. You got the New Zealand dollars, you got the South African rand here, you got the Brazilian real. So there's so many things you can look into. You can see Euro, JPY, X rates and all that. And what we tend to do is we tend to align ourselves with what these guys do. So what I just showed you here, this is the simplified format of it. So we tend to follow what the commercials do, and long, whether they're going long or short. So long means going up, short means they're going down. And basically we follow the changes that they have weekly. So this report is a lagging indicator. This is one of our first indicators, and it's a lagging indicator. Lagging indicator that it's released once every week. And you can imagine, for example, let's say you want to trade on Friday and the indicator is released on Tuesday. Is it still valid? That kind of stuff. So this gives us the overall direction, just like market sentiments, right? Now, this gives us a sentiment. We need to know specific dates of entry. It doesn't give us any entry dates. So in this case, looking at the COT report for Canadian dollar, for example, we see that it's showing us long, right? And then if you go to the seasonality of Canadian dollar around this date, so 16th of June. Now, seasonality looks like this for people who haven't seen it before. We have the 5 years, 15, and the 44 years average price movement, right? This is the average price movement in the last 44 years, in the last 15, and in the last 5 years, right? When we stack them together, we get these three graphs. And what we tend to do is look for where they are aligned, like here, for example, and they're all pointing down. We take those straights there. And when they align like here, we take those straights down. Now, keep in mind, most of these FX assets does not have more than 1 to 2% return on average every year. It's rare to see a very massive boom in terms of average price investment. So if you invest in a forex currency, for example, today, and you come back 1 year from now, you probably will have moved maybe 1 point something percent. Now, it's still in a way, I don't know, some banks give you lower rates, some give you like 0.1%. So that's good. But on average, if you look at which asset moves higher like that, if you're just like a long-term trader, I would suggest you go into something more like gold or indices, right? But with FX is 1 point something percent, 2 point something percent here and there, maybe maximum 3-5%. But we tend to take money from the little fluctuations in between. So if you don't like adventure, stay away from FX, go into indices or go into even some stocks, for example, or go into gold. It's better. So with this one, today's date is 16th. So we go on the map, we trace on the graph, actually, rather, we trace the 16th right here. Now, looking at the 16th right here, we can see that the price is moving up on the 44 and the 15, but on the 5 years, it's going down. So for this, I wouldn't touch this. But now there is a clause in this, because if you look at the COT report, you can see they had 38,000 new positions. That's massive. If we go down and we look at this little chart right here, this little graph right here, let me take out the non-reportable and non-commercial. Look at that heavy move, right? So overall, price movement of CAD has been going lower, even when they increase their position massively right here. You can see the increase right here, massive. It tends to go higher a little bit, but now it's dropping. Now they've done another injection, right? And most likely it's gonna go higher. When they did a massive injection like that here, you can see it went higher for one. Keep in mind, this is a whole like 1 week, right? So when they did that massive injection right here, we had that little spike. And for guys that trade FX on a weekly chart, that small spike is a lot. If you see when they've done it here, you see that spike the next one. Now they've done it here again. So what's going to happen mainly, I mean, if we even look here, for example, when it did a spike here, you can see it the week before it did a tiny spike, you can see that tiny fluctuation. So it's quite a very accurate indicator to have, right? I'm not going to bullshit you. This indicator is very good, right? But you need to know what you're doing when you're using it. So in this spike that we're seeing here, what we might end up seeing is, even though this doesn't align, we might end up seeing the 44-year move. Right? We might end up seeing that 44-year move going up like that, right? But I don't know. I don't want to risk it. I would say you should wait and look at what happens, right? So for that reason, I wouldn't touch this asset. So next one, let's look at something different. I don't really touch FX that much these days because I'm trading, or rather investing automatically with my EA. So I need something more stable for it. Now, indices tend to have a higher return on a yearly base. So I can put money in indices this year and close my eyes and I can be up maybe 10 to 20% next year. That's how good indices are, right? So I'd rather put my money into that than put my money into something in the long term, to into something that is going to do 1%. So if you're not looking long term, you're looking at short term gains, FX might be a perfect one to quickly slip in when you have the perfect alignment. But when you don't have that perfect alignment and you want to have peace of mind and you still want to have investment at the same time, let's look into indices. They're more stable. So in this case, long the same thing means buy, short means sell. And you can see they're going both ways, so I'm not going to touch that. But I just want to look at the net position. So with the net position, it's not a heavy spike like that, but nevertheless, it's still a spike. So, but we're not touching this at all. We're not doing any heavy, lifting with this. So, we go to NASDAQ, for example. Let's see what NASDAQ saying. So NASDAQ is looking, we only look at commercials, by the way. We don't look at non-reportable or non-commercials, right? So for NASDAQ, we have 10,000 position going long. I think this is the meaning of NASDAQ. A massive fluctuation. Okay. Okay. So what we're gonna do is, once we see that this is long, we're gonna look at the seasonality of NASDAQ, right? So go to seasonality, seasonal, you go to indices, seasonality, NASDAQ. So the aim here is to see if we're in alignment as well. So they're going long on NASDAQ, and today's the 16th. So what we're gonna do is we're gonna come to the 16th. This chart is different from the other chart because the other one you can zoom in. We can't zoom in on this one. So 16 right here looks like for the last 5, 15, and 48 years, the alignment isn't that clear. It's actually showing short. The only one showing long is the 5 years. So I'm gonna wait and see what they do around this period. Maybe the 28th of the month or 27th, around 27th or the 26th, 26, 27, 28. We'll come back to this and look at the seasonality if it's in alignment to go long. So those are just two assets I look into right now. There's so many other asset classes you can look into. I mean, in the indices side, we have on seasonality, we have about 5. And then we have on the probability side for the FX, we have quite a lot of them right here, maybe about 30, 31 of them. So, and on the seasonality for FX and gold, we have about 9 of them. So there's so many other stuff on the site that you can definitely look into. So if you want to know more and learn more, go to business.denempire.co.uk. Link will be in the description. And for guys that have the membership, you know what to do. Just continue your analysis. When you find an alignment, take that. And then, yeah, good luck and Godspeed. Stay dangerous, guys, and catch you in the next one.